Welcome to the insurance series. My name is William Freitas from Codex Insurance, and today we've got Andrew Sharbeen from Codex Insurance.
Pleasure
Andrew,
to be here.
welcome
Thanks,
to the show.
Thanks.
Look, naturally we want to dive into a little bit about you and your business. You've just launched Codex Insurance. Congrats.
Yep. Thank you.
But we're going to be chatting about IT liability because that's what you specialize in. That's what
That's right.
Codex is specializing in. So take it away if you don't mind. Tell us a little bit about how you got into insurance first and foremost, but how you got to where you are today with Codex.
Yeah, cool. I've been in insurance for 15 years now. Got into insurance as a broker. So second generation, my father was a broker. So ended up getting into the broking side of things. Spent a few years as a broker in a medium-sized brokerage. Wasn't for me. After a few years, I sort of decided to move on into the underwriting realm. So that's where I spent the majority of my insurance career, specifically within financial lines. So specialized in professional risks and financial risks. Found my niche within the IT sphere over time. You sort of gravitate towards one specific area. I found myself gravitating towards professional risks. I just found it a lot more interesting, not to take anything away from underwriting, management liability and D&O. And then just due to my passion for technology, I got a degree in IT as well. I wanted to pursue that a bit more. And I guess that's the great thing with insurance is that you can choose these areas of interest and pursue them. Every area of interest has its own sort of product. So, decided to go down that path. Got to a point where I sort of decided, could either continue going down the corporate path or try something new. I always wanted to venture out and do my own thing. I saw the opportunity to do so. I always wanted to have a model where I could have some skin in the game. And I found that within, the underwriting agency model, and decided to pursue that. Decided to quit my job. Spent the last 2.5 years just focusing on setting up this underwriting agency. We're finally there.
Awesome, and it's quite a unique proposition, right? So tell us a little bit about what Codex does,
Sure.
and how it differentiates itself from the market.
Yeah, so Codex Insurance it's a specialty underwriting agency. They're quite rare these days. If you look out as far as the underwriting agency landscape is concerned, there's a lot of obviously underwriting agencies, but they do a bit of everything. Do a bit of casualty, a bit of property, they sort of diversify as far as product offering is concerned. I was very much looking to specialize in a particular area because I feel as though there's value in that specialization. Someone who knows an industry inside out can provide you with value add on the underwriting side. Someone who's a bit of a jack of all trades is a master of none sort of thing. And I saw there was a need, especially within the technology space, noting how concentrated it was, a lack of diversification as far as product offerings were concerned, that there was a genuine opportunity there, and it sort of just aligned with my interests, and decided to launch that. So focus purely on technology risks. First product we have is a composite product, so that's a combined IT liability cyber product for technologists, for technology professionals. So it's an all-in-one suite. Gives you your professional indemnity, your public and products liability, and your cyber insurance. It's a one-stop shop.
Yeah, and so there are so many elements that we could touch on here, right?
Yep.
You've mentioned it's a specialist underwriting agency. In some instances, I think what you mean by that is an underwriting agency first came to be because they had a specialist knowledge within a particular space.
Absolutely.
And for, I guess, the listeners at home who may not necessarily have insurance backgrounds, an underwriting agency and an insurer, are where both underwriters might live, in essence, or an underwriter might live.
Mm-hmm.
In your eyes, it might be they're the ultimate insurer, or maybe not the ultimate insurer, but the person providing the insurance solution. And in some instances, you've got underwriting agencies who do multiple different products. They might do directors and officers insurance. They might do professional indemnity and cyber insurance and accident health, and you name it, right? But Codex is specializing in technology risk.
That's right.
That's
Yes.
IT liability and cyber insurance combined in the one solution. So tell us a little bit about what IT liability actually covers.
Sure. Yeah, so I think I just briefly touched on it, but IT liability on its own accord typically includes your professional liability as well as your public and products liability. So professional liability on a very basic level is indemnification for your professional services. Now, whether that's an actor or omission trigger or a civil liability trigger or otherwise, it essentially just covers your services that are noted within the policy. Whereas public and products liability would be covering you for your personal injury and property damage associated with your business operation. I guess as far as the rationale for combining these two products initially was due to the potential overlap between the two, specifically within the definition of product. So there was a bit of angst as far as the market was concerned when it came to being able to differentiate between what software was it a product or was it not. There was a number of public and product liability policies out there that may have excluded software as a product or did not classify software as a product due to the way that product was defined or through additional exclusions. And as far as the professional indemnity policy was concerned, vice versa. So to avoid that situation entirely, the two policies were combined together.
It's a great point, actually, because we actually get this quite a lot. A great example of web developers. Web developers will often ask us, well, why do we need public liability insurance? We work from home or we work anywhere in the world.
Yeah.
We're going to have no one coming into our office, so there's going to be no trips or falls. There's going to be no personal injury or property damage, which is what public liability covers. But as you have just highlighted, which I think is a great way to put it, the public liability component, personal injury or property damage, is what's covering the product component. And from a web development standpoint, it's a great way to look at it in the sense that when you build that website, is that website a product or is that a service?
Yeah.
Hence why the requirement of the two policies or the two coverages merging together.
To avoid the ambiguity. Yes, exactly.
Because you don't want insurers pointing at each other saying, hey, who's paying this claim?
Exactly. And also, if you're distributing products out there as well, there's that component that's being covered by the PPL as well. But yeah, fundamentally it was that potential overlap there and gaps in coverage forming. Mm-hmm. So that was to resolve that. And then it eventually evolved to include cyber insurance. And cyber insurance includes two forms of cover. You have your first party cover. That's your immediate business interruption and mitigative costs. Essentially a form of BI, business interruption, plus increased costs of working or additional increased costs of working, depending on the policy, to help you get back up and running after a cyber incident.
So if someone hacks into your system,
exactly,
these are the response costs that you're going to be able to use to get you back up and running.
That's right, yes. Either that or, there's a privacy incident where there's a whole bunch, could be an accident or otherwise, but a whole bunch of sensitive information has been, let go and it's gone into the public domain and you need to react to that sort of situation, and that's what it's there for, to protect you in those sorts of situations on a first party basis. And then you also have the third party liability. So it's the subsequent claims which may occur against the insured due to the event occurring. So you could be liable from a negligence standpoint for that leak in sensitive information or for the hack itself. You should have had the correct risk management in place to ensure that didn't happen in the first place. You have a duty of care to ensure that the information that you're storing is being protected.
I think you could also mention it's a privacy risk really that it's covering, right?
Yep.
Because what I see clients often come to me and say, well, we're not hosting that particular platform, that particular software, what is our risk? If someone hacks into that software, how is it that I have a cyber risk component attaching to that? Well, really, it's actually the privacy component, right? What sort of data do you hold of your clients, and what do they expect of you to maintain that data secure?
Of course. Yeah. Yep.
And so let's bring it back to the professional indemnity piece, because
Sure.
I think you mentioned a really good component. And I think this is something that often gets misunderstood by clients, because IT liability can be a product that is very easily purchased online.
Yes.
Right?
Yep.
And with professional indemnity, as you rightfully said, it covers you for your professional service of whatever is noted in the schedule. Often I see policies that are not noting all of the professional services that client undertakes.
Yep.
Let's use web development as the example again. They might have an element of implementation as part of that risk. And when they buy a policy online, they don't necessarily notify the insurer of that. And so within their policy, it includes zero implementation coverage.
Sure.
Or zero integration coverage, should I say. Then that causes a bit of friction with the insurer, right?
Absolutely, yeah. That's a really important point. So another thing that is a characteristic of IT liability policies, whether on their own accord as just IT liability or when they include cyber, is that the definition of service is broad. It's intentionally broad for that very reason. IT companies inherently are, broadly speaking, they do bits of everything, right? That's their craft. They don't typically just do one activity. They'll do a plethora of different activities, and that continuously changes as time goes by. So just because that IT company is doing X, Y, Z today doesn't mean they're necessarily going to do that into the future, or they may scale it depending on the demand that's present. Just something that's a really good point. And those those IT liability policies, they intentionally do have that broad scope when it comes to services and products to ensure that any changes which may occur during the period or subsequent to that period being encompassed within that cover.
It's such a great point, right? Because I do see a number of clients that come across our desk that has their current insurance that says 10% web hosting, 10% integration,
Sure.
80% the rest. Maybe just general IT consulting or whatever it might be. But as you rightfully said, as those companies change midterm, this isn't a working insurance policy. This is a policy that you purchase for 12 months. Mm-hmm. And then as and when things change, if you're stuck within a policy that doesn't necessarily include breadth of coverage that can allow you to grow into certain areas,
yes,
then you're really quite limited in terms of what you're going to be covered for. So you've really got to work with an advisor to work with the then underwriting agency or the insurer to make sure that you've got the right solution.
Yes, yeah, absolutely. Especially with material change provisions within wordings as well. You have to specify when there is a material change to your services. But there are also instances where it's very incidental to your core offering, and you've just decided, I can internalize that additional service. That's fine. Because of the way IT companies work. That's how they function. Very, very different from other companies out there. They're very much, they've got their hands in everything, so to speak.
So tell me more about Codex. Why the combination? Naturally, I can understand IT liability being both professional indemnity and public liability in the one, as it has been traditionally, but why also include the cyber insurance as part of that?
Great question. So the addition of cyber is an evolution of the IT liability product insofar as taking the same principles as we just discussed about the public and products liability policy being combined into the PI policy. So too is there overlap in coverage between especially the PI policy, but also the public and products liability policy as well as the cyber. So let's take the cyber, for instance, especially within the context of an IT professional. IT professionals will typically host, or depending on the contract, they may host your data, right? They may be contributing to that in some way, shape, or form. Were those servers, whether they are maintained by third parties or otherwise, you're doing that on behalf of, as an insured, you're doing that on behalf of your clients. So if there were to be a breach of those servers, and there's some sort of security breach, a privacy event occurs. There's an argument to be made that that could be a potential professional service issue, or it could be interpreted as a pure cyber incident that's occurred, depending on the scope of cover. But just delving deeper into that, I think the core issue is the way that monoline policies are formed, right? So if you look at a conventional PI policy, they very much just want to cover the professional services as is its intention. And what they'll typically do, the drafters will put in exclusions for the purpose of removing the coverage which is typically covered under another policy. So I'll look at a cyber policy and they'll say, all right, well, we should have a cyber exclusion in there. So there are quite a few policies out there that have a cyber exclusion. But in situations like this, where that could potentially be framed as a professional service issue, or could be linked to your professional service, that would in turn be excluded. Now, that would only work if, on the flip side, the cyber policy also didn't have a professional services exclusion, but in many cases, it also does have a professional services exclusion. It may also even have a bodily injury and a property damage exclusion, which may affect, the PPL cover, the public and products liability cover. So you have a situation where these monoline policies they've got the right intention there as far as carving out the coverage is concerned, but then you inadvertently create these gaps in cover, right? And this is what the composite product is meant to address. It's meant to address these situations where you could have a claim like that, like I just described, or it could be claimed under potentially either policy, and then you've got insurers just pointing the finger at each other, especially if you've got it with different insurers, that doesn't help. But mainly it's the way that the wording is crafted to ensure that the flow of traffic is going towards the right policy, of course, and that it's enacting correctly. You could have those sorts of situations if you have those monoline products, but with a composite product, it addresses that because it's based on, obviously, it's a one-stop shop. So the claim's going through, right? It's being claimed against that specific contract, which includes 3 different types of lines of business, 3 different types of products. So as far as like insurers pointing the finger at each other, that wouldn't happen because it's the one insurer. So you're going to cover that incident, just a matter of where it goes. And because of the way that the policy should be written, there should be a clear intention as far as where the claim's going to be directed through the imposition of specific clauses to ensure that those incidents are being directed correctly.
And I think this is where the insurance industry gets a bad rap, where it's so easy for clients to buy policies online. They can buy a professional indemnity policy, they can buy a cyber insurance policy, and they can have exclusions that exclude each and every type situation that might fall in between those 2 policies and not be covered at all. I think this is the biggest issue, particularly when it comes to technology risks.
Yeah, absolutely.
That clients acquire insurance policies based on contractual requirements. I need a professional indemnity policy. Let's go and get one. It has a cyber exclusion. Oh, I'm going through SOC 2 accreditation. I've got to get a cyber policy. Oh, let's get one. Perfect, got one. That has a professional indemnity exclusion without them even knowing about it. The professional indemnity policy has a cyber exclusion without them knowing about it.
Yeah.
12 months down the track, something happens that falls directly in between those 2 policies, and the situation doesn't get paid.
Yeah, which is terrible.
Not a great scenario. I honestly think clients need to get advice. Clients need to get advice from advisors or brokers like us who will point them in the right direction, and policies like your own, where it's providing the coverage holistically across all 3 risks, professional indemnity, public liability, and cyber insurance. That's what serves that purpose and what solves that solution.
Yeah, absolutely. Yeah.
And so from a contractual risk standpoint, let's talk about that for a little bit, because we see that on the rise quite a lot. Clients are coming to us saying we need to increase our limits, for example, but also they're being requested to agree to particular clauses like indemnity clauses and the like. How does that impact their insurance obligations as well?
Yeah, it really depends on the circumstances. So, Yeah, there's been a lot of change in the contractual space, especially with the advent of the UCT regime, so unfair contract terms, which recently got introduced and is only being broadened now. So I suppose if you go back several years ago, contracts that were originating from IT companies were always known to be extremely stringent. They were always in favour of the IT company. That would typically just exclude everything under the sun as far as consequential loss and the rest of it is concerned within legal means. And yeah, they'd essentially cap their indemnification to no more than 12 months of fees that they've taken on. That is changing or has changed over time. And now what you're seeing is more of I suppose a fairer arrangement where there is mutual indemnification occurring. We'll cover our negligence when it does occur, and you'll cover your negligence when it occurs, and that's it. So there's that sort of arrangement that's going on from a insured contract to client perspective. Now, in terms of the other contracts that IT companies are engaging in, yes, especially with government contracts now, which is typically reciprocal. So it's you receive it from the government; they're not going to accept your contract. You'll typically find there are, funnily enough, because the government came out with the UCT regime in the first place, but sort of doesn't really apply in their case. They usually do push a lot of onus back onto the IT contractor. And some of those contracts will stipulate that you need now, a significant amount of cyber liability coverage or PI coverage. Of course, the cores are your PI coverage and your PPL and your public and products liability. But now we're starting to see that expand into cyber liability as well. So they're being requested for a $10 million cyber liability limit or even a $20 million cyber liability limit. And unless they want that contract, then they need to attain those sorts of limits. I guess the biggest challenge right now is the way that cyber policies are structured. So typically the cyber policy will have both your first party and your third party combined under a specific section together. Whether it's one product or whether it's under a specific section within a composite product, within a multi-line product, it's usually combined together. And there's typically an aggregation which occurs. They tie in the limits. The insurers are tying in the limits. So when they're requesting these sorts of limits for third-party cover, they just simply can't access that capacity because no one's going to come out with a 20 mil limit for that includes first-party cover unless they can separate out the third party. But typically, as I said, because they're so combined together, usually that's quite difficult to do. So there is a bit of an issue on that end as far as fulfilling those contractual obligations is concerned. I guess the way my policy is structured addresses that by including the cyber liability component under the first section of cover. So that's your technology liability, and permits you to take out a higher third-party limit than the first party. And there's also no tie-in between them as far as, that section's not going to degrade your third-party limit, which you do need. You should, if you're saying that you have a 10 mil limit that's covering your cyber liability, it should be a preserved limit for the third-party exposure. So, there are some policies out there that can fulfill that, but a lot of them do still tie in the first-party loss to it.
Yeah, and I originally mentioned that question because obviously there are some policies with contractual liability exclusions that clients need to be aware of when they're agreeing to certain clauses. But most certainly when it comes to limits, I've definitely found that it can be quite cost prohibitive for a client to increase their limit of cyber insurance to include both first party and third party coverage, and also cost prohibitive, but also the availability, as you mentioned. Some insurers can't do more than $5 million or $10 million of first-party cyber coverage. And so when a government contract is asking you to have 20 million cyber coverage, more often than not, all they're concerned about is third-party liability.
Yep.
So to satisfy that sounds like a great solution. And, it's funny, in various different jurisdictions outside of Australia, they very much view professional indemnity and cyber risk one in the same when it comes to technology risks, right? So let's jump into claims if we can.
Sure.
Naturally, it's a very new business that you've launched with Codex, but I'm very well aware that you've been across various different claims. So we'd love, if you've got any sort of claims examples or scenarios where it can be, borderline professional indemnity and borderline cyber risk.
Yeah.
Any particular scenarios that come to mind?
Yeah, I think the most evident one would be that of an MSP, a managed service provider. Their core service to third parties is to host applications on their behalf. And to varying degrees, they'll be responsible for those applications depending on what you pay for, like the services that you're paying for. But usually as a pure MSP, they're doing a whole broad range of services for you. It's basically a one-stop shop. You provide them with the applications, or you ask them to maintain those applications, host them, and do everything in between. So in those sorts of instances where you do have a breach that does occur, there is clearly a potential for that to fall within the realms of a breach of one's professional duty to ensure that the data is being secured, that the applications are being secured, but also can be interpreted as a cyber event in a sense. So it can definitely fall into the two spectrums. And that applies to pretty much any IT provider out there, because you don't necessarily have to be an MSP to be handling your third-party clients' data and applications. Typically, when you go to approach, let's say, a software developer, they'll say, all right, well, this is how much it costs to develop the software. Typically, it's not, a means of providing you with the bespoke software and off you go, you handle it. Sometimes bigger clients prefer that, obviously, because they can internalize that and they have their own hosting services internally. But most clients, especially knowing the climate within Australia, as far as it being predominantly composed of SMEs, will typically ask that IT company to just host it for them. Like, take care of it. We'll pay you a retainer per month, and you can make sure it's updated, that it's patched, and you just sort all that out for us. So in those sorts of situations as well, it may not be a full-blown MSP, but they're doing an element of managed services. To a certain extent, most IT companies provide managed services. So anyone who's doing that can have a situation where, a breach may occur, and it could be deemed to be a breach of the contract that they've entered into between those two parties.
To keep information secure.
Exactly. And also, it's just the core service that they're providing, which is, you've created this application for us in the example I just gave, but you're also hosting it, you're also storing on your servers, and you have your duty of care to ensure that that is not going to be tampered with, that it's not going to be breached, that it's not going to go down. And when it does happen, if it does occur due to a failure on their behalf to have adequate risk management in place, that can definitely be made to be a professional service issue as well as a cyber issue. So that's definitely an overlap area.
And talking about managed service providers, because it's hot topic right now for not only the insurance industry, but obviously the MSP space, because they are definitely experiencing a restriction in the amount of options that is available to them.
Yep.
And if you're an MSP listening, like if you've got a professional indemnity policy and a cyber insurance policy separate to one another with two different insurers, it's a grave concern.
Oh yeah, it's a huge issue.
Now, what do you think is the factor of the key restriction? I mean, if you ask me, it's primarily claims. There has been some claims scenarios most certainly, but if I can be as bold as saying, I feel like a few underwriters may not have really understood what an MSP was in the past.
Yeah.
There were a lot of insurers who were dabbling in IT liability, professional indemnity and cyber.
Yep.
Not so much, professional indemnity and public liability.
Yep.
and not so much on cyber, but someone else takes care of the cyber.
Sure.
So they're insuring IT liability risks, but not really understanding what a managed service provider does.
Yeah.
I feel like that's been a real shift after a few claims that insurers are going, oh, we didn't realize we're covering that, because these clients are hosting solutions for their end clients. And subsequently, if our client were to suffer a breach or suffer an issue, then we're on the hook on multiple different occasions on multiple different clients. Would you agree?
Exactly, yes. MSPs have an aggregation issue because they host, it's not only one client, it's multiple clients, it's multiple applications, it's thousands of records that they're responsible for. You're spot on. I think the industry matures over time, right? So it didn't fully comprehend the full extent of the exposure associated with MSPs. Now that there have been a few claims here and there that have popped up, there's obviously an evident push to reduce their exposure to it, either outright or to adjust their limit deployment and relative to the rate that they're charging. So that's just insurance. So that occurs. So that's fine. But yeah, like in terms of the overall exposure for an MSP, usually the MSPs that you'll find here in Australia will typically externalize the hosting. So they'll use the big four, AWS and Google Cloud and Microsoft Azure and the rest of them to do that for them, essentially, to maintain the infrastructure as a service for them, and then they will take care of the rest. There was a bit of a misconception as far as where the liability would lie. The problem with that rationale that an AWS will be responsible because they're the ones who are technically hosting and it's their servers is pretty flawed, because the contracts are extremely onerous. They push pretty much everything onto you as the end user. You are responsible for the way that you configure the applications and everything in between. They don't take any responsibility for that. They'll maintain the infrastructure, but if it's your fault that it went down, well, that's on you. So this is the biggest issue with MSPs here, is that they're using these third-party vendors, which vast majority of the population on Earth uses. That's fine, but they in turn are taking on all the liability, and they're essentially just clipping the ticket along the way. They're providing a good service, right? They're making sure that it's being hosted correctly and it's being configured correctly, but relative to the amount that they charge as well, to the exposure that they have, that I think is the biggest issue for MSPs from an insurance standpoint. So it's the ability to be able to cover something like that with such an aggregated exposure within a reasonable means of doing so. You could charge an arm and a leg, but is that practical? With a lot of these MSPs who are quite small in nature, they can't afford that sort of coverage in the first place. So yeah, it's a bit of an issue for the market right now.
And so when you're looking at underwriting various different risks, whether it's an MSP or whether it's any other technology type risk, what are some of the elements of risk management that you look for to ensure that it can be, one, an insurable risk, and one, that it can be at a favourable rate for the client?
Yeah, so risk management was one part of a big picture when you underwrite these sorts of risks. And I guess I'll just touch on why IT risks are quite distinct from other risks out there. It's from a professional risk standpoint. Having had the experience of underwriting a plethora of different risks, professional risks, I can tell you IT risks, they can be misleading as far as what is being presented to you from an activity standpoint. Just because someone's doing 20% system integration doesn't necessarily mean that is extremely high risk. It depends on the context in which that is being performed.
For what industry, for what particular contract?
Correct. So there needs to be an empirical view of the risk. You have to observe it, and you can go onto the website and make a judgment as far as like what they're doing. Usually IT websites are very airy-fairy as far as like what they're doing and whatnot. It's very hard to interpret what they're saying, especially with the jargon. But you build this up over time. You build the ability to be able to understand what they truly do, and then you can apply these aspects to them properly. You can actually interpret what the activity actually means within that context. A lot of the time it's being interpreted as just that. It's like, oh, they just do consulting, therefore it's good risk. But there are different variations of consulting, some more involved than others. So you just need to be conscious of that. But from a risk management standpoint, that does form part of that underwriting process as well. And it's multifaceted. You need to look at things like the contract. So it's always good due diligence to review their standard contracts, understand how often they're engaging with those standard contracts, and making sure that they have the relevant clauses in place that are both fair and reasonable and allow them to minimize their exposure as much as possible, whilst also ensuring that they're not entering into contracts which are too onerous, those which are bespoke in nature, and ensuring that there's not immense centralization with a single client, because otherwise you're basically going to get bullied into doing things which you shouldn't otherwise do. You may not have the skill or caliber to do it, but because you rely on that sort of income, you're going to sort of bend to the knee.
Yeah. The one thing we always ask for when it comes to technology risks is asking for their standard terms and conditions.
Yep.
Because contract certainty is most certainly what clarifies their position when it comes to claims time.
Yes.
And so I can absolutely guarantee from a risk management standpoint, that is what underwriters want to see, want to understand, want to view what measures they have when it comes to taking on alternative contracts or making amendments to that contract. Is there an internal legal review process? Is there an external legal team as part of that process? That all aids to getting a better solution.
Absolutely, yeah. There seems to be this misconception amongst clients, amongst insureds as well as brokers out there, that sometimes that just because terms and conditions exclude X, Y, Z, that they're not going to be on the hook when something does occur. That's not how contracts work. They're not there so you can just absolve yourself of all liability. You need to be conscious that there is something called gross negligence, and you cannot contract out of law. So it's just something to bear in mind, that I understand that you have a fantastic contract, but you still bear liability where relevant, where it's applicable to you. So just something else to also bear in mind.
No, I completely agree.
But so other than that, that's more from a professional services perspective. You'd also want to see that they have the right Q&A in place, so quality assurance, and ensuring that they have a quality risk management procedure in place, whether that's through milestone sign-offs, testing, alpha beta testing, UAT testing. Testing's great. Make sure all the bugs are out before it gets launched, of course. These are very basic things, but they should be implemented correctly. And ensuring that your scope of works is within means, that you have, because the biggest issue for IT companies is scope creep. From what I've seen, especially from a third party perspective, it's where you started off with a very limited scope, and then all of a sudden over time it's just creeped out because the client wants more. The client decides to add an additional feature. And then, before you know it, you've got this monstrosity in front of you, and you can't handle it, and everything starts to blow out, and that's when you have your issues with third parties. So you need to have a process in place to ensure that if you're adding additional services to your contract, that these are being filtered correctly, that these are being signed off correctly, that you actually have the means of performing it, that you're not just saying yes because you want to retain the relationship. So that, I think, is extremely critical as well.
Yes, scope creep, I think, is a great way to put it, because what the basic claims that we've mentioned is, the failure to render services or even the failure to render service to a standard that is somewhat expected by the third party.
Yes.
And they just, ascertain a loss and bring a claim against that business, and then, that's what they're on the hook for. So that's what we tend to see is a fair bit of professional indemnity claims from that perspective.
Yeah. And when you don't limit your scope, sky's the limit. Like, how long's a piece of string? So you want to make sure that the end party knows what is being delivered, and you're both on the same page. The issues arise when there's a miscommunication that occurs down the path somehow, which can occur, right? And so putting measures in place to ensure that doesn't occur and everything's above board is it's always a prudent risk management aspect that you should implement. Other than that, something else to also look at, or that we would look at, would be, what do you learn after the delivery of a project? Like, do you actually do a debrief? Do you go through and say, not only what happened, what was good, but what was bad? What actually didn't go to plan? How do we improve on that? Because that's how you get long-standing improvements in the delivery of your product. It's not so much, giving yourself a pat on the back because you did a great job. It's trying to look at the negatives and improving on those negatives and identifying them and being able to confront those negatives and say, okay, well, this is an area that we didn't do too well in. How do we improve upon that later on? So that's something else that definitely, we'll check off.
And it's a great way to mitigate any particular or potential claims occurring. If there's an issue with the delivery of the service, then you hit it there on the head at that moment. You can then rectify it, and it doesn't become an issue where you then have to, stump up defense costs, submit your insurance claim, have defense costs occurring. It's a great example. And we've only really touched on risk management procedures for the professional risk side, right? There's naturally the cyber component as well that comes with it. So what are some of the cyber risk management procedures you would expect? Because I know we've seen this with clients happen quite a lot, particularly as cyber insurance has evolved over the last 5 years. There's been certainly a shift towards requiring a certain level of risk management. 10 years ago, it would have been very different. You probably wouldn't have needed multi-factor authentication. You wouldn't have needed weekly backups. Now, for majority of the insurers, you absolutely need a few elements of risk management to be covered to the bare minimum. So
absolutely.
What would you expect? What are some of your hot tips?
So cyber's an interesting one. You've got your go-tos, which is the ones that prohibit the breach from occurring. So that would be your multi-factor authentication, critical for when you're logging into any external portal, whether that be through email servers or otherwise. Also, making sure endpoints are encrypted. And there's a few there's a few things out there that insurers are using, such as vulnerability scans, basic vulnerability scans to detect those, which is great. That's part of that underwriting process. Those are arguably, some of the most important ones from an intermediate risk management standpoint. There's also the soft part of it, which is training your staff, arguably the most important part, to ensure that they understand how to treat information, how to approach the storage of that information, and being able to detect when they're being socially engineered. So that's extremely important as well. But I think the most important thing from my standpoint, those are just a couple of points that I've just rattled off. And obviously you want to check things like backups and whatnot, and making sure that they have a patching regime, etc. Those are all great. From my perspective, the best means of handling cyber incidents is to acknowledge that at some point or another you're going to get breached, no matter what. You can have these measures in place, that's fantastic, and we would expect that as a bare minimum. But beyond that, it's what do you do when you do get breached, And also, how do you structure your systems to withstand the breach, right? Because it's all well and good to have these measures in place, but if you've got a honeypot of information that you have not segmented, that you haven't actually thought through as far as like, okay, well, what happens if someone actually gets access to this? Then you've just needlessly exposed yourself in that sort of situation. And so that to me is most important. It's like, how do you ensure that if someone does infiltrate your system, that they don't get access to everything, right? So try and segment your network, try and break it up so that at the very least, if they get access to one component, they're going to get access to all the other components. So that's something that I put a heavy emphasis on. That, and obviously, how do you react to a breach when it does occur?
And I think that's how you partner with your insurer, right? And I think that's often a misconception across the broader industry of clients, that they don't really understand that the insurer's incident response plan needs to feed within the incident response plan of the client.
Yep.
If there is a breach, they need to call the 1300 or 1800 number of that particular insurer and utilize that response plan to make sure that you respond to a claim efficiently. And often we've found that professional indemnity claims can be brought on the back of how a cyber-related issue is handled. And so you want to be on top of that quick, smart.
Absolutely, yeah. Yep.
So that makes complete sense.
Yep.
Now, cheekily, we've spoken about the darling of the technology risk space being the MSPs. But what other occupations would you say are relevant to this space that you'd be looking to work with?
Oh, yeah, sure. So as far as the demographic is concerned, within the IT space, the vast majority are SMEs. So over 90% of companies that operate within this space in Australia are small to medium enterprises. Usually contractors doing a lot of consulting or bits of projects, whether that's consulting, project management, programming, etc. And they will contract with much larger organisations or the government, etc. So that's sort of your bread and butter within Australia. And I suppose as far as trends are concerned, where things are going within that space, there's obviously been a key interest in things like artificial intelligence. And what you'll find is, and I guess this is an important point to make as far as how this segment is very different from other segments, it's continuously changing, right? So a programmer 10 years ago is very different to a programmer now. Someone who developed software 10 years ago is very different to someone who develops software now. They have new tools, but also things change rapidly in that space, so much so that your methodology changes completely. Something that was prudent to do 10 years ago is no longer required. Like, you don't need to do some things because of AI, and it may have taken a huge load off the work that you're performing. Or there's just been a change in the technology completely. So it's about adapting to that as an IT professional, adapting to that change, whilst maintaining your ability to deliver adequate and good quality services and products. But yeah, there's an immense variety of different IT companies in Australia, from your AI-centric ones that are trying to implement AI now in different components of companies, which is good. It does introduce new elements of risk that you need to consider, of course, and that's why you do need a specialist within the space who actually understands what you're attempting to do and the risks involved with that. And I think that's an area that underwriters have been a bit lacking in, as far as being able to keep up with the pace of development within the IT space in Australia. From an underwriting standpoint, we very much like to keep everything static from our end, but because the industry is just continuously developing, you need to develop with it. You need to approach things differently as an underwriter, both from a manuscripting perspective, from a policy form perspective, as well as your approach to exposure with these sorts of risks now.
Yeah, and also the intention of what it is you're looking to cover, right? My number one, and I don't expect you to have an opinion on this, but my number one bugbear at the moment is when clients are now going through their contractual requirements and they're saying, okay, we need to buy professional indemnity insurance, because it amazes me the amount of technology risks out there that are not protected for professional indemnity insurance. It's not legally required, mostly a contractual requirement, which is why maybe after 3 or 4 years in business, they then take on a contract and it requires them to have $1 million of professional indemnity coverage. They then come to us, or they go online and they buy a policy, and that policy has retroactive date inception. Meaning that it only covers that client from the date of which they purchased that policy.
Sure.
The biggest issue with that is if any claim is brought against them for work that they've done 2 years prior, they think, well, I've got a professional indemnity policy right now. Why would this not cover me for what I would think it would be covering me for? And it is purely because of that retroactive date coverage. And if that retroactive date isn't backdated, as it should be, then that's a significant issue. Now, the insurers, I can appreciate the insurer's perspective. You know, if the client's never purchased professional indemnity insurance, why are they buying professional indemnity coverage now? Is there an issue in the past that they should be concerned about? We'll just do it from the day they purchased that policy. But there can be ways of which you can get that backdated. And I don't think clients should be purchasing policies that does not cover them for prior services. Now, there's obviously a few things you've got to work with your advisor on to make sure that can be approved by the underwriter, and the underwriter's really got to work with the advisor to make that happen. You can't get that direct. You absolutely can't get that direct. Direct insurers will not care, and that's why it's super important, like you said, to work with a technology specialist in this space.
Absolutely, yeah. From both a broking perspective as well as an underwriting perspective. As I mentioned, the space it's changing all the time. So you need someone to be able to not only communicate those sorts of changes and the services that you're actually conducting efficiently and correctly, but you also need somebody to be able to understand whether your policy is fit for purpose. So many policies still contain some quite archaic exclusions in there, which may interfere with these new services being provided. Never had the intention of doing so, but now it does. So those sorts of things need to be adapted as well. And it's not, to me, it's not acceptable to just slap on, a specific activities exclusion and say, oh, you know what, these are all the activities that we don't like, and we're just going to hide it in the exclusion section, and or hope no one's going to see it. A lot of people don't see it, and as you said, those who tend to go through direct means, they may have inadvertently just had like 90% of their activities excluded by the sheer notion of having this sort of blanket specific activities exclusion within their wordings. It can be more subtle, it can be more explicit, but yeah, it's definitely something that needs a professional. You need a professional to review for you.
Yeah. And lastly, this is probably not something that you can give a concrete answer on. This is something that we get from a lot of clients, is how much coverage is enough coverage. And, no one really can advise on the exact number. Contractually, that's generally what sets the limit. We sort of look at varying different, factors, whether how big the contract is, what their turnover is, how many employees they have, types of clients they're working with. What are some things that you would be looking out for in terms of like adequacy of limit? Yeah,
so I suppose it depends on their requirements, and it is very much correlated with the size from my perspective of the insured. As the insured begins to grow, they recognise that they are taking on a lot more exposure, that they're more exposed from a vertical standpoint. So they end up taking more limit out. As far as the cyber is concerned, sometimes the cyber is sort of an afterthought. It's not really taken out immediately, and they prefer to just focus on their third-party cover until they build enough scale where they can start justifying the purchase of cyber. So there are those sort of factors occurring, but it does typically correlate with the size of the insured and the overall scale of the operations, pushed by as well contractual requirements, which may require you to take out higher limits as you grow, as you engage with bigger parties. So that would just naturally start to increase your requirements.
Andrew, absolutely perfect. Thank you for coming on the show. It's been an absolute pleasure to have you. And I think the Australian insurance industry is blessed to have someone of your experience to come out with a new product in Codex Insurance that packages both the professional indemnity and the public liability, being the IT liability, along with the cyber insurance. So it's 3 coverages effectively all in one policy that really serves the technology space really well. So thank you for bringing that to space. And for me, the refreshing view is you will absolutely be breached at some point, you know, and in terms of a risk management standpoint, it's getting clear on how it is that you respond to that breach. That is key. And working with a specialist insurance advisor or broker who's going to step you through that process and work with specialist underwriting agencies to get you a solution that's adequate for you. So, Andrew, thank you for coming on the show.
Appreciate it, mate. Thank you.